Welcome back. You're still tuned into Midcap Masala right here on ET Now. And Nifty is now sitting with a cut of 120 points as we speak. But in an otherwise tepid market, one stock that is standing out is Euro Pratik sales. That one reported its numbers yesterday and it was a very strong set on a sequential basis. In fact, the stock is up nearly 4.5% as we speak. But to understand whether the momentum in earnings growth that the company has reported in the second quarter will sustain, we now have Gunvantraj Singhvi, Chairman and Managing Director at Euro Pratik Sales, now joining us. Mr. Singhvi, morning, and thank you so much for joining us here on ET Now. On a year-on-year basis, although revenue has jumped up by a marginal 10%, Ebitda and margins have fallen on a year-on-year basis. But when we compare the numbers on a sequential basis, they look very solid. If you can take us through why the discrepancy and what drove momentum sequentially?
Firstly, thank you so much for having me here. Uh, as you know that in the month of April, we had a massive fire and it took us a couple of months to get back on the feet. And I'm very pleased to announce that from the July quarter, we were again at the trajectory of growth in terms of revenue. In terms of PAT, there was a little shortfall in terms of numbers. There are a couple of reasons for that. The first reason is all the marketing tools were burnt in the fire. So we had to reprint the catalog samples and it cost us quite a lot. And second reason is that the employee cost year on year, if you compare, there has been an increment. We want to penetrate deeper into the Indian market. So that has resulted in the profit getting hit a little bit. But going forward, we are confident that we can build on this on the momentum in terms of sales and get back the numbers for.
Now that the business is coming on back, and I believe you're also making some investments in some of your overseas subsidiaries. But firstly, what's the outlook with respect to the margins?
Yeah, in terms of margins, we'll try to maintain it. And the running quarter, the current quarter and the coming quarters, you will see upwards in terms of revenue as well as the profitability of the company.
Okay, so that's as far as the margin figure is concerned, but you're also into decorative surfaces business. If you can take us through how is demand shaping up across tier 2 and tier 3 cities, and what is the long-term opportunity growth that you see across business verticals and across regions?
So I'm very proud to say last in the month of September and October first week, we launched a range which was very economical. That is especially catering to the tier 2, tier 3 cities. The response has been phenomenal. We are penetrating deeper into the Indian market. The price point of these economical series is very close to the paint cost. So we see a lot of headway there and hope to expand our business in the B and C categories of cities all across India.
Right, but along with that, you have just increased your investments in one of your US subsidiary, that is Euro Pratik C Corp Inc. What's the long-term vision for your international business, and how soon do you see this contributing meaningfully to your top line?
So generally, any outside India business, it takes a few years to get back to shape. So it's been just like 1.5 years that we have started the US operations. So hopefully, within 1 year or maybe a maximum 2 years, we will have a positive outlook from there as well.
Understood. So that's as far as overseas subsidiaries is concerned. Your IPO was a complete OFS, which means you have not received any proceeds from that IPO. But your balance sheet looks very clean. If you can take us through what your capital allocation policy will be and what will your capex plans and expansion plans will be, both in the domestic and in the international market?
So we are an India first company. The main focus is to grow the India market. 97% of the revenues comes from India. So going forward, what we have been doing, innovation, new R&D, development, designs, which will keep on happening. Our endeavor is to launch more than 1,000 designs customized for the Indian market every single year. We are on the same growth path to do that. Also, as I said, we launched this economy series, which is doing fantastically well. Also, I would like to add here is we are seriously looking into inorganic opportunities as being the leader in this category with around 16% market share. So we are looking for inorganic opportunities coming. We are delving on that as well.
But what sort of an inorganic opportunities? Any different segment or any associated segment you are looking to invest in?
So the same category, we want to be focused into the same wall panels, and we are looking at maybe a forward integration in that.
All right. And what kind of forward integration? What will the capex be? And consequently, how do you see that benefiting your margins?
So we are still working on it. I won't be in a position to give you numbers, but uh, the work is on that front as well.
All right, and just one follow-up with respect to your export outlook that you were just sharing, that any investments that you do, it takes a few years to actually contribute meaningfully in your financials. But if we take a medium-term outlook, what sort of a mix with respect to the domestic and the export contribution are you envisaging?
So as I said, we are an India first company. 97, 96, 97% will remain in India. Uh, Global business will slowly build. We are also not investing a huge amount there. We are going slowly just to understand the market. We have done a lot of exhibitions in the US and the European market. So hopefully in the coming future, we would like to grow the exports. But in the near future, I see the Indian market growing higher than the exports.
Right, so Indian market is expected to grow at a larger pace as compared to exports. That's the word coming in. Thank you so much for taking your time out and joining us here on ET Now and helping us understand what the outlook is going forward. But shifting
Thank you.
focus then.